Good evening, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hopefully you guys had a great day in the markets today. And in today's news, guys, well, the SPY and the QQQ were actually down today at the end of a quite dramatic day, to say the least. Now, it all started off with a bit of a red sell-off in the morning, and that was quickly alleviated by some comments here between Trump and President Xi. Apparently, there was a phone call that was had that lasted for about an hour and a half, with some pretty good results at the end of the call, with both presidents inviting each other to their respective countries. That led the SPY initially to have a very good reaction on the morning, and you can see that from this move right about there. This is when the news of the phone call transcribed, and we actually were positive green pretty much all across the board. All major sectors were green. However, thereafter we ended up with some drama between President Trump and Elon Musk, with Trump going so far as to call Elon Musk crazy. And we had noticed this as part of yesterday's action in yesterday's SPY and QQQ price action, when Elon Musk was using choice words to describe his feelings and thoughts on the amount of federal spending that was going to come through as a product of Trump's big, beautiful bill. And thereafter, the Twitter drama ensued and ensued and ensued, with both parties exchanging blows across many different topics, and just led to an overall sell-off across the day, which unfortunately Tesla was the spotlight of, Tesla being down almost 14.25% on the day, resulting in a loss for the company of about $156 billion in market cap. And amidst all the drama and turmoil, well, we also had AVGO earnings. So in today's video, guys, we're going to cover a few things together. Number one, we're going to be going over that phone call between Trump and President Xi. Have we learned anything new, or is it just kind of, patting each other on the backs type of thing? Thereafter, we are going to go into the drama saga between Elon Musk and President Trump. I'll keep it as apolitical as possible and just describe what exactly happened today and what the potential short and medium term impacts could be on the Tesla brand. Thereafter, guys, we're going to cover our AVGO Broadcom earnings. They had earnings after the bell, and the earnings, as a matter of fact, were quite good, except maybe it was a situation just like CrowdStrike, where the stock has ran a lot into its earnings, and even though the earnings were very good, not enough to keep that sustained rally going overall. Thereafter, of course, we're going to go through our major technical analysis rundown on our major stock market indexes, see how we're shaping up after today's declines, and thereafter do the same thing across our big tech names today, see how big tech names are shaping up, because it was a mixed day across the board for many of them. Are they still in buying opportunities? Should we be holding back? We're going to take a look at all those big tech names and derive some trade ideas and whether or not they're good for long-term portfolios still. So it should be a very fun and interesting video, guys. Let us jump right into the action right away, shall we? So moving on to the SPY. SPY down about 0.48% on the day. The Q's down 0.75%. But as I said early this morning, the entire market was actually green before we got that drama between Elon Musk and President Trump. Overall, we can take a look at the heat map here, and you can see it was not that pretty. Defensives coming down by a wide margin here. Costco with a very rare 4% day sell-off overall, and that was because their May sales numbers fractionally missed the estimates, but it was enough to pull the company down about 4%. The rest of defensives not doing too well at all. Then, of course, there's Tesla, 14.25% down percent. Palantir down 7.77%, but all across the board, you can see big tech was fairly mixed, right? Apple down, Microsoft, Amazon up, Google up, but Meta still down, and semiconductors were tracing a little bit. NVIDIA at one point today, guys, was up almost 1.5%, and unfortunately, even it got unraveled amidst the drama between Elon and the president. That being said, the banks and financials were also sliding, healthcare also not having that good of a day, and the bottom half of the market, the interest rate sensitive ones, were also pulling back. So a broad market day of consolidation across the board. Taking a look at the one-day relative, you can see that even better. Only basic materials, energy, and communication services were to the upside. Healthcare, pretty much flat. To the downside, though, consumer cyclical, of course, and consumer defensives, both sides of the consumer, staples, and discretionary, taking a little bit of a breather, and that is in spite of the positive news that came out this morning between President Trump and President Xi, of course. So before we get into more charts and more analysis, guys, let us review those two earnings pieces, and we're going to start it off with the phone call, right? So Trump confirming that China trip after a very good call with President Xi. Call lasted for about an hour and a half, 2 hours. Donald Trump said he will visit China after speaking to its leader Xi Jinping over the phone. Trump wrote on social media that the hour-and-a-half conversation was primarily focused on trade and had resulted in a very positive conclusion for both countries. He invited me to China, and I invited him here, is what the president said. We both accepted, so I will be going there with the First Lady at a certain point, and he will be coming here, hopefully, with the First Lady of China. The Chinese leader was also said to have told Trump that China always kept its promises, and since a consensus had been reached between the two countries, both sides should abide by it. That is a reference to both sides having accused each other of breaching the deals, right? You guys remember over the past 2 weeks, it's been a question of China accusing the US of breaking its end of the bargain, the US accusing China of doing the same. So apparently, amends were made over the phone today, and reiterating the fact that, well, China reiterated the fact that they did not, as a matter of fact, breach their end of the bargain, referencing the rare earth minerals deals, in which they said they weren't singling the United States out. They have those policies across the entire globe. So they didn't actually break their so-called promises with President Trump. And President Trump, of course, saying that he was upholding his end of the bargain. That was the news that led to the markets rallying a little bit this morning. Obviously, you want to see kind of a tapering down of the trade tensions between China and the United States, and that will be the best result for the market. And you can clearly see that whenever we get some sorts of talks like that, the markets respond really, really, really well. And that was until this piece of news came out, right? So we understood yesterday that we are presenting on the channel the fact that Elon has been vocally criticizing the big, beautiful spending bill, which kind of undermined his efforts at Doge. Elon Musk spent a lot of time and a lot of effort, of course, for the president, trying to find wasteful spending. Some people agreed with what Doge was doing. Some people did not agree. It was a very polarizing department for the 140 days in which Elon Musk was in that process. And Elon Musk kind of felt a little bit undermined that, Trump was taking the cost savings and then just spending a lot more money in the big, beautiful bill. At the end of the day, though, guys, this is politics, right? Politicians, for the most part, whether Democrat or Republican, they do like spending money. That is what gets them a lot of donations. That is what gets them, favoritism from various aspects, various leaders of various different sectors. Now, you can say about that what you want, but that is just the reality, right? Politicians are there kind of to spend money, to do what they want and stuff like that. Some politicians spend more money than others. We're not going to talk about that, but that is what Elon Musk was criticizing overall. That was the crux of his argument. And today it kind of derived into a high school drama show, if you ask me my humble opinion, but we're just going to get into the news real quick. Trump says that Elon Musk went crazy, suggesting cutting government contracts for his companies, not only Tesla, because we knew that yesterday a part of the action from Elon Musk was concerns over the $7,500 EV tax credit being cut out of the new spending plan from the Trump administration. But now, over and above, after Elon Musk's posted several very spicy tweets on Twitter today, Trump threatened to remove all government contracts, which would include the contracts that other companies that Elon has, such as SpaceX has as well, right? Which are very large contracts overall. It all started down here when Musk went onto Twitter and said that without me, Trump would have lost the election. In another post, he actually said that he supported that Trump be impeached, as a matter of fact. Now, thereafter, Trump posted a video in which he was having a news conference at the White House, and he was asked by reporters what he thought about the whole situation. And Trump said, listen, he's very happy with the work that Elon did, that he knew that Elon knew all the premises of the bill that was currently coming out, so it should not have come as a surprise to Elon Musk. And Trump at that point did say as well, the attacks haven't started on me personally directly yet, but I'm assuming they are going to come. And they came just a few hours later, right? So that being said, President Trump coming out and saying the easiest way to save money in our budget, billions and billions of dollars, is to terminate Elon's government subsidies and contracts. I'm surprised that Biden didn't do it already. Then Elon Musk said, this just get it better and better, make my day, etc., 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 right? So then Trump saying that I took away his EV mandate that forced everybody to buy electric cars that nobody else wanted. And he just went crazy. And that was kind of the tipping point. Thereafter, Elon Musk getting into some personal attacks as well, saying that Trump was in the Epstein files. And it just got really messy, really dramatic. Pretty much a high school breakup story in essence, right? So what do we have at the end of the day? Well, obviously, we know that this is going to do some temporary brand damage to Tesla, as Tesla was supposed to benefit from the Trump trade due to Elon Musk's close association with Trump. Well, one could argue if that association is no longer to be had, and EV tax credits are no longer to be had as well, and favored treatment is no longer to be had too, it's not going to be easy for Tesla moving forward, that's for sure. Well, they'll have to rely on their own fundamentals at this point and not possible, help from Trump's government. Now, that being said, another company caught in the crossfire is, of course, SpaceX. Elon pretty much saying at the end of the day that he wanted to pull the essentially the Dragon capsule, right? Which is the capsule that SpaceX uses to do missions and do back and forth runs essentially between Earth and the International Space Station. It's a very popular contract. So Elon Musk was saying that they're going to terminate that effective immediately. And obviously, you know, that went on for more things. But anyway, here you go. SpaceX is one of the nation's largest contractors, securing $3.8 billion over hundreds of government contracts in fiscal year 2024 alone. The company's taken more than $20 billion from NASA and the U.S. Air Force and other agencies since 2008. So not a small figure, right? A Washington Post analysis published in February that found that Musk and his companies have received at least $38 billion from the government in the form of contracts, loans, subsidies, and tax credits over more than 2 decades, referencing all of Elon Musk's companies, and they were going to be SpaceX, namely, was going to be a big player in Trump's new Golden Dome missile defense shield plan. So all that being said, that was the drama for the day. It resulted in Tesla coming down over 14%. However, at the end of the day, after tensions were really high and people kind of cooled down a little bit, we got this retweet and agreement from Elon Musk, which pretty much said after Bill Ackman was coming on and saying, I support Donald Trump and Elon Musk, and they should make peace for the benefit of our great country. We are much stronger together than apart. Elon Musk coming in and saying, you're not wrong, and obviously posting several other retweets and comments hinting to the fact that, you know, he's probably done on his side and whatnot. Maybe it escalated a little bit too far. So it's an evolving story, guys. We'll keep track on how it is. But of course, it does some short-term brand damage to the Tesla brand overall, especially in terms of market sentiment. So that stock could be very volatile moving forward into the near-term future. Your opinions on them are your opinions, of course. We're not going to discuss here politics on the channel that much. I'm just here to present the news and the impact on the stock market, which was felt, of course, especially it rippled through tech, and the impacts on Tesla stock overall too. So that being said, those are your 2 news articles for the day. Hopefully you guys enjoyed those. Now moving on to the Broadcom earnings, and let's have a look, right? So leading into today's earnings for Broadcom was having a tremendous rally, especially over the past 2 weeks after we were breaking higher out of this consolidation phase. That being said, leading into the earnings, the company was up 15 to 16%. And this is kind of exactly like CrowdStrike, right? A very big push into earnings, double-digit percentage. That means that if a company is going to sustain that rally and go for even more, especially in the face of overbought criteria, well, you're going to have to prove it to us, right? You're going to have to come out with some absolutely amazing earnings that nobody was expecting. Now, Broadcom's earnings were fantastic. They were really good, but they were just not over the top, beating the bar by a substantial exponential amount good, right? So that being said, the stock right now finds itself down, let me turn on after hours, roughly about 6% the last time I checked. Yeah, it's down about, well, 4 or 5% right now in the after hours. So not that big of a drop, but they had really good numbers, guys, right? Moving on further, they beat EPS by 0.69%, and they beat revenue by 0.31%, and they also beat their guidance for the next quarter. So double beat and a beat on next quarter's guidance. What more could you ask for? Not much. Broadcom really did exactly what they were supposed to do, right? So moving on to the Broadcom article, Broadcom beats on earnings and on revenue. Let's move into the article, shall we? Chipmaker provided robust guidance for the current period as well. They said they expect about $15.8 billion in third quarter revenue. The expectation was 15.7, so double beat on the current quarter and a beat on the estimates for next quarter as well. Revenue in the latest quarter rose 20% year over year, which is fantastic. Company growing really, really quickly in that respect. Net income was also a very cool 33.1%. Not as good as last quarter, which was about 36%, but high 30s, especially for a company that manufactures mostly products, but that does have a very expansive software division, is very good. Now, here's what the CEO had to say. We continue to make excellent progress on the multi-year journey of enabling our 3 customers and 4 prospects to deploy custom AI accelerators. He is talking about the hyperscalers and big tech, right? A lot of their business, as a matter of fact, most of their business, especially in their AI division, has to do with the hyperscalers, right? That being said, the partners are unwavering in their plans to invest in AI infrastructure. So referencing the fact that, you know, kind of like NVIDIA has been saying, that the investments into AI and infrastructure build out could last deep into 2026, dare we say even maybe 2027 as well. Broadcom said it earned $4.4 billion in AI revenue during the quarter, which is very good. $5.1 billion in AI chip sales overall. That is going to be the projection for the next quarter. So still a very nice acceleration, double-digit acceleration from this quarter onto next quarter too. Hyperscale partners continue to invest, said the CEO. He said he expected the company's AI growth to continue through fiscal 2026. Very good. Their customers, of course, are Amazon, Google, and Microsoft. Those are the big 3, partnered with AVGO Broadcom right now for their networking platforms. And the company's software business, which includes VMware, grew 25% year over year to $6.6 $6.6 billion in sales. That is very good. So they have two lines of business, AVGO. One is the semiconductor solutions business, which was $8.4 billion, very good. 17% year-over-year increase. So the semiconductor portion, that is inclusive of this AI figure right there, 17% year-over-year, fantastic. But the software solutions was another highlight for the business, 6.6 billion in sales. That was 25% up. So all in all, guys, Broadcom had a fantastic quarter. Nothing fancy, nothing over the top about it, just a very solid quarter, right? And the stock's been rallying tremendously. Now, Broadcom has been one that's been growing through acquisition. We know that. They spent about $69 billion for VMware just a few years ago in 2023, but they have been growing both organically and also, through acquisitions too. Just wanted to show you guys that chart in terms of how many acquisitions they've done, which results in the market cap that they have today. Now, here's the revenue breakdown overall. You can see that a lot of the revenue, as a matter of fact, 65% of the revenue is in semiconductor solutions, which includes AI, but of course it also includes a whole bunch of other things that we don't often talk about for Broadcom. Keep in mind, Broadcom has over 20,000 patents, so many products in this company overall. It is not only an AI company, it's very broad. Well, Broadcom, it's very broad in terms of what they do, in terms of networking solutions, industrial, server storage, wireless, and then they have the whole infrastructure software division, which has been growing really, really well, especially since that acquisition of VMware just a few short years ago. Cybersecurity, enterprise software, fiber channel networking, mainframe software, and private cloud as well. All of those are in the infrastructure solutions, which gives them a fantastic revenue number in the last year of $51.6 billion. Fantastic if you ask me, right? So we're not going to go through any of these, image charts. What I want to show you guys is the revenue increases here. You can see that it was a very solid year. This is before they acquired VMware, of course, and now when you include the revenue jump of VMware, you can see a clear jump in revenue. So this jump in revenue is not all organic, but just letting you guys know that the company's revenue is indeed up and to the right, moving in the right direction. Gross margins continue to be improved upon at 76.5% for fiscal year 2024. Very solid. Adjusted EBITDA as well, getting the artificial bump from VMware, but still up and to the right. And free cash flow, very solid free cash flow numbers. Although the company doesn't have a very strong free cash flow yield at about 1.65% at the current valuation, still, it's very good, guys. It's not bad per se and everything like that. Growing in terms of stock dividends and whatnot. And that's pretty much it, guys. Over and above, it was a very boring company. The company set out some plans last year to execute on its AI strategy and on its software expansion strategy from the VMware acquisition, and it's been doing so perfectly. There's really nothing bad to report about the company. Now, in terms of whether or not is it a buy, right? Is it a buy after the company has ran phenomenally into the early stages of this year? At the midpoint, guys, this company is already up, or was up before the earnings at this stage. They were already up, right? 10% year to date, which is better than the S&P 500, of course. Very strong net margins, growing free cash flow, high gross margins as well. Nothing bad to say about them at all. However, just another quarter for another company that's ran a ton into earnings, and unfortunately, they were not able to raise the bar even more than people's expectations. So right now, at the valuation at $250, it currently stands at a forward PE of 37.8. Not crazy, all things considered, but definitely not one of the cheapest companies in semiconductors right now. The PEG ratio stays at a cool 1.72, which is not that bad either, considering their good revenue and good EPS growth, and the free cash flow yield remains a bit low. So all things considered, guys, Broadcom is a type of stock where I wouldn't necessarily be buying it here if I didn't have a position on valuation alone. I think it's a very solid company, and they've always been able to maintain very stable gross and very stable net margins. Their EPS is relatively stable up and to the right as well. The revenue is very stable up and to the right as well. It's just that the company trades somewhat a little bit rich right now, but not egregiously rich, right? It's just not cheap, but I wouldn't dare say that it is expensive overall. If Broadcom comes down here into the lower 200s, think, 230, 220 and below, then you start getting a little bit more risk premium associated to the stock. It's a bit better of a buy right now, right down here, obviously in the sub $200 range. It was a fantastic buy during the tariff sell-off, but we may not get those price levels again. However, if we are holding shares from prior, I see no reason to sell this stock. So, there's always three types of ratings, right? Buy, hold, or sell. For me, this would categorically be a hold. The company doesn't have as fantastic fundamentals for me in terms of cheapness of the stock to buy it immediately, but in the event that it comes comes down here, we might be due for some swing trades. If it does come down back into the 240, 230 range, maybe I can sell some short puts down here in the mid 220 to 230 range and be happy if I do get a sign overall and ride it a little bit higher. So those are my thoughts and my analysis on Broadcom earnings. Hopefully you guys enjoyed that. Now, let's get into some charts, shall we? All right, so first off, we're going to tackle the SPY right here, down about 0.5%, but no major structure has changed. We know that we're encountering resistance right now above, which currently still stands between 600 and roughly 610. Now, we were hoping that there would be some trade deals announced over the course of the week because yesterday Trump was very vocal in saying that he wanted every country's best offer to be submitted to the United States by the Wednesday session. Unfortunately, that did not happen. We got some good results with the China phone call overall, but no concrete numbers for trade deals. The SPY is still battling with resistance right now. We have not lost structure though. Any move lower, going to be looking for a higher low. Anything above pretty much 583, looking for higher low for possible further trend continuation. But if more uncertainty hits the markets overall, just rely on the fact that we are kind of trapped between two levels right now. Support below us is fairly strong, 585 down to about 575, and your weekly bulls still maintain full control. Even though we've unwound a little bit of this week's move, we are still in a somewhat sideways pattern of accumulation where the bulls are largely still in control, so keep all of that in mind. Moving on to the Qs right now, down about 0.75%. Now, the Qs had made their way deeper into resistance, and dare I say, if the drama would have not happened today, they were well on their way to possibly even cracking it in the next few days to the upside. However, pullbacks are normal in the market, and today was a categorical pullback for us. So that being said, looking for a higher low, anything above 512 is just going to be looking for a higher low for maybe the bulls to try and attempt this move again. That being said, if markets are able to recover tomorrow, as you can see, the futures are actually quite green, and now that the drama has kind of alleviated in the after hours, well, we might get a second shot at doing this right away. That would be looking for a breakout of the range, retest, and possibly run. If we pull back, well, the higher lows are down there and support stays planted 510 down to about 500 area. And the weekly moving averages are there as well. We've had a very nice sideways and somewhat upside accumulation period right now, and the bulls do have a lot of space to work with here. Anything above 430 on the weekly is just looking for weekly consolidation overall to try and really push this one higher if we need a bit more consolidation. Moving on to financials right now. Financials, still unable to crack this now 7 trading day range overall. It's a very tight range of accumulation where we don't really have an established trend, right? The bulls are trying to go for the trend breakout, but they cannot get it done, and that is because resistance stays put 51.50 down to 50.75. In the event we crack these lows right here, 50.3, unfortunately that would be a new daily downtrend and would possibly send us off for some more weekly consolidation. Good thing for us, the bulls have tons of space to work with here. Anything above 45.12, looking for a weekly higher low for possible further trend continuation at that point. So we'll keep an eye. Financials definitely has been one of the leading sectors recently. The leading sectors have been the Qs and the SMH. So if we're paying attention for market rollovers, you would need to see the Qs and the SMH roll over if you're expecting to see the entire markets go into extended weekly consolidation. And so far that has not happened. The bulls still retain control of the daily uptrends. Moving on to XLV right now. XLV also pulling back on the day today, but nothing really to report. It was roughly a flat day. We are still looking for the daily uptrend expansion here on XLV, and the clearest time frame of them all, in my opinion, is the weekly. The weekly is trying to form an awkward base of support right here. Big move down. Now you can see it's been a battle, right, for the past few weeks between the bulls and the bears. One thing's for sure though, we have a lot of support below us in the whole 130 down to about 120 area. This sector has been lagging the SPY a lot in the last 4 or 5 years, and is currently still below its 200 weekly EMA, which is that green line right there. And whenever it is below there, it usually tends to be a decent opportunity to buy the whole sector. But this is a sector that moves quite slow. It is not tech, it is not semiconductors, so you may have to be patient if you do have any buys on this one overall. Now moving on to semiconductors, speaking of, they were down about 0.18%, and remains to be seen how much they'll actually be down tomorrow as a result of those Broadcom earnings. The earnings were not bad. Maybe they do get bought up, such as CrowdStrike's earnings were bought up the following day, but suffice to say we are currently still into resistance 260 down about 250. If you make a bit of your move to the downside here, rejecting from resistance, you're looking for a higher low. Anything above 235 should be interpreted as looking for a higher low, possibly for another attempt at smashing through this resistance. And if we give it it all back, well, just understand, guys, we got a lot of support below us. 233 down to 214 is a massive area of support, and the bulls at that point will just be looking to hold some form of either an accumulation range between two levels, and even if we drop, guys, there's so much support below us and the EMAs, it should provide a very good backstop for the market. So unfortunately, still no breakout above several major resistance ranges. You are going to need an all-time high break and a broad market push on the SPY to really carry everything in the right direction at this current point, in my opinion. And lastly, moving on to the Russell. So the Russell just basically not responding at all to the drama today. It's actually one of the only sectors on this list that was green, but green by a fraction, right? Daily uptrend still remains in place, looking for a higher low at this point, anything above 203, looking for a new higher low to possibly continue attacking this resistance range. This resistance range, I'll remind you, 216 down to 207. It's been a very, very, very hotly contested area, congestion there, resistance there, and then all the way back here, you can tell, right? Resistance and then support back here. It's quite an important level for the Russell. That's why it's been so challenging for the bulls to break over and above. One could argue right now that if you might be seeing it, right? It is possibly, and several other sectors and charts show the same pattern, possibly an inverse head and shoulders. We will see if the prophecy comes true and it gets filled and the bulls are able to break above. That would be the best case scenario. But overall, right, we have a beautiful range of support below us, 200 down to 190 in the event that the markets choose to pull back. And that's everything for your market review. The VIX today was up about 5% overall because of the drama that was being had. So we'll see if the drama lasts more than a few days, or we get some negative impacts from trade deals, or tomorrow, of course, we have the non-farm payrolls. Don't forget that, right? Non-farm payroll is going to be a big market moving event. So keep that in mind. If the non-farm payrolls are bad, similar to their, counterpart here, which was the ADP job employments here. Well, if that number is bad, then the markets are definitely going to get rocked to the downside. Expect a spike in the VIX, and any spike in the VIX, I'll remind you, is a great time to be selling options, more specifically selling put options or spreads or whatever your go-to credit sell strategy is in the market when the VIX pulls into the mid $20 range, the dollar right now doing absolutely nothing, still relatively flat, and the bulls are looking to desperately protect the bottom end of this range right here, which is about 98. They are trying to go for the weekly save and go for the weekly uptrend and try to get back to the 100 to 102 range overall. I'll remind you, the dollar, since all the tariff episodes started, year to date is down about 9%. At the lows, it was down almost 10%, and we may just be looking for further slides on the dollar overall if the trade negotiations stall, and if foreign investment into the United States also remains somewhat of an issue. Moving on to the yields right now, the 10 and 20-year yields, they really did not move that much today at all, guys. I mean, they were up about 0.78 on the 10-year. On the 20-year here, they were up roughly about 0.23. So they did not take back that much of yesterday's very big move after the employment dump. If tomorrow shows that the employment is weak again, I would expect these yields to go down, because once again, that goes for a point in terms of rate cuts, right? Now, we know that the balance of risks is both inflation and the jobs market for the Fed, but most recently, there's been a lot more attention to the jobs market. Inflation seems to be in control, at least in the short term, not talking about the medium-term impacts of tariffs or anything like that, but in terms of just the normal inflation numbers that we've been getting prior, there doesn't seem to be much risk there, especially for the longer term. However, the labor market could be quickly deteriorating, and if that's the case, well, then Jerome Powell is going to probably cut rates and try to manage that aspect of the balance of risk. So I expect if tomorrow's jobs report is negative, yields will go down and probably bonds will have a little bit of a rally here. Bonds have been coming up nicely off the low, but still no major structure recaptured in terms of weekly uptrends. So any longs on bonds will have to be taken with a very long time horizon overall. Moving into gold right now. So gold also was up over the course of the day today. Well, they were up and then they came down as a result of the drama as well. It was up, and then unfortunately, guys, well, it unraveled with the China trade talks, was able to recover a little bit throughout the day, but gold has just really been flat, right? They've been building this really nice shelf in terms of the daily uptrend attempt right here. Still trying to find a new daily higher low and go for the trend continuation trade. Not looking bad, waiting for the 12 EMA to possibly catch up. I still do believe gold is a decent long here in terms of a swing trade proposition, but it could pull down all the way into the low $3,300 range, clip into the support, clip into the 26 EMA, and then possibly go for a little bit of a rally. We know the clearest time frame on gold has largely been the weekly time frames. It's just been a sideways weekly bull flag of accumulation, right? Overall, looking pretty good, tapping into the 12 EMA right there. And after 6, 7, 8 weeks almost of sideways accumulation, very volatile accumulation, but for the most part, sideways to say the least, maybe we end up in a similar situation like this, where we're just prepping for another move higher, as uncertainties on a global scale are still quite prevalent, and I would not be surprised if this is still a favored trade as a hedge for institutions for the remainder of the year overall. That was everything for your overall market rundown. Now, before we get into tech, we have to cover Bitcoin. Bitcoin coming down, of course, as a result of the drama today, right, which started roughly at 10 in the morning and then kind of unraveled thereafter. So Bitcoin, unfortunately, not able to hold the support range. Well, it is holding, but was not able to hold the upper end of the support range, 104, 105. Daily downtrend simply continues at this point. One could argue that this looks somewhat like a head and shoulders too, and I would agree. All you need to know is daily downtrend and weekly is in a consolidation phase. We were talking about this, guys, looking for a weekly higher low. I was saying that even if this support range doesn't hold, we might be making our ways down or our way down into the mid 90s, where we have more, congestion here from the markets. And the 12 EMA is right down there at about 97, 98K. So just looking for a weekly higher low, guys. The chart is still looking very healthy, but the Bitcoin breakout for new and higher all-time highs may just be on pause right now. As we can see, the indexes, the stock market, right, and even Bitcoin just struggling to expand beyond its previous prices when we had the greatest amount of momentum in the markets just a few short weeks ago before our price action stalled, right? We've been stalling for about 2-3 weeks now on the SPY and the QQQs, and that's been no different for Bitcoin as well. That was everything for your overall market rundown. Now let's dive into some big tech names. So moving into Apple first, Apple was down over 1% on the day. However, we know that there's no major structure that has either been gained or lost on Apple. It's really trapped between a range right now. 222 down to 210 is the range of resistance, and down below here, 196 to 187. In my case, I might be selling some short puts below down here into the low 190 range, into the high 180s. Not a bad trade in my opinion, but overall for some swing trades, guys, it's very complex, right? Because we do not have any confirmed trend directions right now. So a bit of a tough trade right here. But if we did have to take some swing trade longs, the stops would have to go below 193 because that would invalidate the trend, right? That would be a weekly downtrend overall. That would not be good. If we're taking longs from here on the pullback, the target area should be around the mid 215 to 220 range overall. Not my favorite trade just because it's not trending right now. And we also know that Apple's struggling with a few different things, namely the tariffs, namely the iPhone slower than expected refresh cycle, and of course the revenue run rate, which has really slowed down over the past few years, and couple that with a high valuation, and you end up with a stock that may not be moving anywhere fast anytime soon. Moving on to AMD right now, down about 2.44%. The entire semiconductor index unfortunately pulled back. We'll see if that continues into tomorrow with AVGO slide. But overall, the pattern is very clear here. It's a daily uptrend. We were moving into resistance 120 up to 132. This green line right here was the 200-day EMA, so keep that in mind. If we come into rejection area, if we continue this rejection momentum, right, we're just gonna be looking back into support, guys. 112 down to 97. The daily is still not looking too bad, but in the event we unravel, we're still just gonna be in sideways consolidation, guys. For the past 4 weeks, the AMD unfortunately has not done much of anything. It's tried to push up twice into this area. Pay special attention. The big area of concern would be if we lose 107. That unfortunately would be at this rate a weekly downtrend, and you'd be going into a bit more consolidation, maybe for a gap fill. But so far, that's just projections, right? We'll see how it goes. The daily is not looking too bad. The weekly is not looking too bad as well. The bulls all are still holding right now, largely in a bull flag, and the valuation of the stock right now at 115 is still relatively cheap, everything considered. So I do still think that over the next 6, 12, 18 months, AMD has a very good criteria for some expansion. Moving on to Amazon right now. Amazon was doing so well today, and then they killed it, man. Amazon was up 2.5% on the day, and then the drama ensued, and now unfortunately it's down. So Amazon was trying to push up into its previous highs at about 215. Unfortunately, they got rejected at that area, and now are sliding a little bit in to the end of the day. So that being said, daily uptrend is very clear right now. Any move lower looking for a higher low, anything above 201.57, looking for a new higher low to possibly continue the uptrend. Where will we be continuing into? Well, I'm glad you asked. This resistance resistance range. 228 down to 217 is going to be that range right there. In the event we slide a bit more on the weekly, the one level you have to keep an eye on is 198. If you somehow lose 198 over the next few weeks, that would be a weekly downtrend and would just be due for more markets consolidation. There's a big gap to be filled down here. 193, if you ask me where I'm looking to write puts on Amazon, it has to be below 200, guys. In this little juicy area right there, I would not mind accumulating more Amazon shares for long-term portfolios, but also for some swing trades as well. Right now, Amazon, tough to take some swing trade longs. It's equidistant, right? We're halfway between resistance and support. Not my favorite type of trade, but any shares that I do have, I'm still holding long. Of course, valuation is still relatively good on Amazon and still one of my favorite companies in the market. Moving on to Google right now. So Google up about 0.25%. Not a bad day for Google, but Google also was up 1.5% at a certain point today. And unfortunately, the drama unfolded and they lost it. So daily downtrend was the case. We might just be looking for a daily lower high. If we continue pushing down into the support range, it is currently 170 down to 161. So the bulls have a lot of space to work with here, especially when you look at the weekly time frames, which is the clearest time frame in my opinion. Weekly uptrend, looking for a weekly higher low still, and that would be above anything above 149.40. Valuation on Google is still good, but we know that they're battling several different fronts right now, possibly losing some of their search volume to the LLMs and chat services like ChatGPT, Perplexity, etc., etc., etc. And also, we know that the DOJ lawsuit against them in terms of monopoly status is currently an overhang, a dark cloud over the business, which leaves it at a very cheap valuation, but still one of my favorite risk to reward trade-offs in the market right now. Moving on to Meta. Meta was actually, doing really well on the day again, but unfortunately ended red, 0.48%, but we know who's in control here. The bulls in control of this chart right now, and if we start some consolidation here, anything at this point above 633, we'll just be looking for a higher low for possible further trend continuation. One area you might pull back into is this 660 right there, confluence with the 12 EMA, which is your short-term EMA momentum, right? Average. Moving on here, 683 is a slight resistance range. If we completely disregard what happened today and just keep pushing higher, the next area of resistance, guys, is the all-time highs in around 740, which would be roughly 10% higher than right now. On the weekly, everything is looking great for Meta, so they can afford a bit of a pullback if it happens. The weekly, very nice uptrend. At this point, anything above 620 on any extended pullback would be looking for a weekly higher low. Meta's a fantastic company. I still think it's relatively cheap for what they're trying to do in the next 2-3 years. I'm holding all my long-term shares, not selling any. The valuation is right there, and the expansion is looking quite nice. Moving on to Microsoft right now. Microsoft up about 0.82% overall, kind of just disregarding what happened today overall in the markets. Microsoft very, very, very solid, right? Looking very good for a daily uptrend expansion. Anything right now, any pullback above 455, just looking for another daily higher low for more trend expansion. Microsoft actually hit a brand new, or actually, did it? It did. Brand new all-time high today on Microsoft. 469.65 is the new all-time high. Looking quite good. Microsoft has just been on an absolute tear since its earnings. Reminds me of Netflix a little bit. On the weekly, we're still deeply extended from the 12 EMA, so I would not be buying up here for either a swing trade or adding to the long-term portfolio. But if for some which reason the markets go into consolidation and Microsoft inevitably has a weekly downswing leg, which it always does, right? It doesn't just go straight up. If we get a consolidation leg, I'll reevaluate for some trades, but at this point, it'll have to be under, in the 450, 440 range overall. The valuation right now at 440, now at 467. This was a bit extended. Now it's still a little bit more extended too. Moving on to Netflix right now. So Netflix up about 0.88%. Another stock that since its earnings has done nothing but go up. Pure daily uptrends. Beautiful chart movement right there. Eventually, all good things come to an end, guys. It's a historic rally, and it's not going to last forever, right? However, at this stage, anything above 1175, looking for a higher low, possibly for further trend continuation. And where it might be going? Psychological numbers, right? 1250 was the next one. We just hit it today. 1300 should be the next target, and the weekly is very extended from the 12 EMA, and the monthly time frame as well. It's very extended from its own 12 monthly EMA. So these pull-ups are very nice, but eventually Netflix can consolidate and can come into its 12 EMA as it does every single time. When is that going to happen? Anybody's guess, right? But I'm just here to say no swing trades on the short term for me. And in terms of adding to the long-term portfolios as well, it's pretty expensive. I was a big fan of adding to the long-term portfolios here. However, now it's run a lot, right? The company is currently up year to date. Let me just check. year to date, we're up 40%, right? So chasing Netflix up here, maybe not the best proposition. And adding it to the long-term portfolio, at this point, it's just a hold from me. I'd need to see some extended pullback on some weekly timeframes for me to really consider doing that again. Moving on to NVIDIA right now. NVIDIA was actually up 1.5% today. Tried to push into the 145 level, unfortunately was not able to get it done as the Elon and Trump drama kind of just pulled back the entire markets overall. So that being said, still in a daily uptrend. We're still looking for a new daily higher low on any pullbacks. Anything at this point above 133.16, looking for a new daily higher low, possibly maybe a second attempt at just clipping down into here into the support range. 135 down to about 125 is that range. It starts right here with the 12 EMA though, looking not too bad. Overhead resistance is still your all-time high range, 145, 150, and in the event we pull back a little bit harder here on NVIDIA for some which reason, right? Well, you got to understand that NVIDIA has tons of space on the higher time frames here. On the weekly, at this point, guys, anything above 95, looking for a new weekly higher low for possible further trend continuation. If I, for some reason, see NVIDIA pull down into the lower 130s or high 120s, that would be a condition in which I would find myself writing some short puts under the market, looking to possibly play some of that juicy put credit premium. At 140, the valuation is not that commanding overall. Moving now on to Tesla. Tesla obviously down 14.25% as we presented in the introduction. And we were kind of nervous about this pattern coming into yesterday. And I had commented on the channel when reviewing this chart yesterday that since the drama between Elon and Trump was an evolving story, any further drama would probably be, damaging in terms of Tesla's stock price. And we saw a hint of that yesterday when it was down 3.5, but the whole markets were green. And now today you have pretty much the end game catalyst for it, right? 14.26% to the downside. That being said, daily downtrend is clearly in motion for Tesla right now. We are currently into support, 300 down to 260 overall support, and we're coming into these guys as well. Unfortunately, with today's move, we've now lost all of the major moving averages, and any short-term retracement bounce will most likely be looking for a lower high. We'll see then how high the bulls can bounce. If you can bounce high enough, you have a chance of reclaiming the daily uptrend. If you don't do a high enough bounce, you have a chance of just perpetuating this daily downtrend into the lows. Why does that matter? Well, because the weekly timeframes hold the key right now, guys. We're clipping into weekly higher lows. 271. If you were to lose 271, unfortunately, you would lose the weekly uptrend as well, and you just open up the door for some further extended consolidation overall. Definitely going to be a very volatile stock since it's not moving so much on fundamentals. It has the robo-taxi event. It has the ongoing saga between Elon and President Trump, of course. So we'll see. But Tesla is going to be very volatile in the near-term future. If I had to write some short puts right now, I mean, I'd personally be waiting for the low 200s. I'm not saying it's going to go down there. I'm just saying that's where I would be interested in possibly writing some puts if I wanted to benefit from this volatility overall. And the price action right now not being so clear because the weekly is currently a big engulfing move. So most of your bullish momentum is lost, and most of the Trump positivity associated with the stock has now also been lost as well. Now, a couple more here, moving on to Palantir. So Palantir down about 7.77%. No major news overall, guys, right? But if I had to derive some sort of reason why Palantir might be down this much today, they do have a lot of government contracts, right? And we know that with what's happened between Trump and Elon, government contracts are kind of potentially on the chopping block. Palantir had similar news, if you guys remember, back in February and March, when they did go down, when the Trump administration and Elon specifically were looking to cut government contracts. So maybe Palantir is just getting caught a bit in the noise of everything. That being said, one thing is very clear. We have just lost the daily uptrend. The lows have been flushed, but we have not lost the support level just yet. The bulls seemingly holding right now. 118, 119 are these lows. If Palantir continues breaking down tomorrow, well, unfortunately, we'll have lost the support area as well. It opens up the door for the backtest resistance and the daily downtrend flush overall. But the weekly bulls still have tons of space right now. Anything above 105 would just be at this point looking for a weekly higher low for possible further trend continuation. And a likely scenario for Palantir, guys, might just be consolidation range, right? If we do consolidate at the higher end here between, let's call it a very volatile range between 100 and 120, that would not be crazy overall. The company's valuation is very high. You're paying a lot for the growth. So maybe, just maybe, this is Palantir's time to consolidate. If it's not the case and the bulls are able to just rekindle everything right now, upside targets remain 140, 150 in my humble opinion. Now, moving on to SOFI. SOFI up 1.56% today, but SOFI was actually up over 5.5% today and sadly gave it all back. Testing the resistance range of 14 to 16. It's going to be a challenging area for the bulls to get through. They might need a little bit of news. Daily uptrend is still underway right now. They set the higher lows. If we were to flush these guys, no real clear price action, right? We're really just kind of range bound right now. You'd like to see some expansion, but we're just not getting it. The clearest time frame, in my opinion, for SOFI is the weekly time frame, in which we see a very nice weekly uptrend into some form of a very awkward bull flag overall. Pay special attention though, guys. If you were to lose 1250, it would not be good. That would be categorically a weekly downtrend at that point, and we might just be due to retest the lower end of the $12 to $11 range. I'm a big fan of adding some shares of SOFI to the long-term portfolio at 13.5 and below, so maybe get a chance to do that again in the near-term future, or just selling some puts under the market right here could be a very decent proposition too. The monthly timeframes are still as well consolidating right now, right? It's just a very wide consolidation range for a fantastic company, which is really, kind of struggling right now against higher interest rates overall, but the market cap is still fairly cheap at 15 billion. I would not be surprised to see a 2-3x on this one, maybe over the next 2, 3, 4 years. Moving on to Uber right now. Uber was actually up 1.46%. We know that every time, it's a battle between Uber and Tesla right now. And I was saying in the most recent videos, I don't think it's really one or the other. I think Uber has some good synergies with the autonomous vehicles that it's going to probably try and include on its networks. So it's going to be a long time before it's really one or the other. For now, I think it's a case of Uber being able to integrate various autonomous vehicle services into its ride-sharing platform. They have the customer base. The autonomous vehicle people want the customer base. So we could see a lot of platform integration before it comes a question to be one or the other, right? That being said, Uber is up 1.46. It is still in a daily downtrend right now. The bulls are trying to attempt to bounce. We'll see how high the bounce can get. If we can get a 618 or 782 bounce, higher move like this, the bulls have a good chance of recapturing the daily uptrend. If the bounce remains somewhat weak like this, 50% or under, then you might expect a continuation of the daily downtrend, and that would just be continuation of weekly consolidation, looking for weekly higher lows right now. At this point, anything above this guy right down here, 71.45, looking for a higher low. Support range 80 down to $78. I'm a big fan of selling some short puts on any red days in or below this area, as the valuation right now is quite fair, if you start coming into under 80 again. And then lastly, TSM. TSM was also on its way to a very nice day today and unfortunately got a bit rejected at resistance. Resistance stays put, 210 down to about 205, and we're clipping into that area right now. Daily uptrend is clear as day to me right now. Beautiful move higher. If we get rejected and move a bit lower, anything above 190, just looking for a bit of a higher low for possibly a second attempt at breaking through that range. If they do it right away, you're looking for the good old breakout, retest, and run trade setup. So 2 trade setups in my opinion in that respect. And on the weekly time frames, TSM is looking very good, similar to NVIDIA, right? A lot of lift on this most recent weekly leg higher. And at this point, if we get any extended consolidation down back into support, which is 193 to about 183, anything guys above 145, right? Just looking for a weekly higher low for possible further trend continuation to the upside, and the valuation in those lower 180s to 190 ranges is still very good for this company in my humble opinion. That is everything I had for you guys for your overall stock market rundown, the AVGO earnings, the drama. We can take a look briefly at some of the biggest gainers and losers of the day. DLTR coming up after their earnings, looking very solid there. No trade from me right now on the dollar stores. ANF pushing a little bit higher, even though they were able to retrace everything after their earnings. Also, no trade from me, but just interesting price action right now. Some could argue that there's a long right now. Stock goes below there and you're trying to retarget some of this expansion. Not in it for me, but that's pretty much the trade that's on the table. Micron, after I was saying yesterday, Micron is also going somewhat for a breakout, right? If we can break out of 107, 110, that would be really good. Give me the breakout, retest, and possibly run for Micron. You guys know I'm in this one. I think it looks quite good and the valuation is still very manageable. Airbnb as well, benefiting from a bit of rally today, daily uptrend into resistance right now, talking about the 143 down to 131. Decent proposition for AMD right now, right? They have the weekly uptrend, they're pushing for a little bit more, and they just have their new Airbnb services offering. So I'm not in any swing trades on Airbnb right now, but it is part of my long-term portfolio. I think it's looking quite good, but no clear swing trades for me at this current term. Rocket Mortgage was actually up over 9% today before retracing everything after the drama. That is after Redfin shareholders approved the buyout from Rocket Mortgage. So Rocket Mortgage will be acquiring Redfin right now. It is actually confirmed. The stock was up higher and unfortunately pulled back. So this one, I'm a big fan of selling some short puts. $12 to $11. I love this range. I think when interest rates do come down and the housing market does start getting a little bit more buyers into it, maybe over the next 6 to 12 months, this company could have a very good shot of being a very nice company that just starts outperforming to the upside. And for that reason, I've been positioning with some call options down here, long dated call options, and kind of same thing for companies like Affirm, right? Affirm is very consumer discretionary oriented, very interest rate oriented as well. So it argues to be said, right? If interest rates start moving down and, you know, the consumer doesn't completely unravel as part of a greater recession, Affirm is actually one of my asymmetric bets. I have some call options way above the market, leap call options, and this is a play for me on the comeback of the consumer and the decline of interest rates over time. Moving on to the downside here, well, we have to talk about Circle. Circle had their IPO. It's not downside, but it's just for some reason there's no price. Guys, I bought one share of Circle at about $92. I saw the IPO a bit late. It was late at night for me. I saw it. I bought one share, guys, just to participate, right? If you guys don't know what Circle are, they are the parent company of USDC. If you guys are familiar with crypto, it is a stable coin. They have a large portion of the stable coin market right now. Stable coin market is evaluated at about $250 billion. USDC has about $60 billion of that. They also offer wallet services and several other fee-based services in which they collect a decent amount of money. As you can see here from their fundamentals overall, they generated about, $1.68 billion last year with about 10% net margins, which is quite good. So I would not mind participating in this one to the upside. I'm not going to go very, very heavy on it. For now, I just have one share. I'm often like to see IPOs consolidate a little bit for a few days before I further position, kind of like we saw in CoreWeave, right? CoreWeave consolidated for a few days. We were able to get a better sense of the company's financials, fundamentals, and where they're trying to go with it. So I'm of the same opinion on Circle. I may want to let it consolidate a little bit before I position, but I wouldn't mind buying a little bit of this company, especially if the valuation can come down, anywhere between the $10 to $15 billion range, which would be closer down here to the 70 to about mid 60s range. And then of course we had CoreWeave, right? CoreWeave coming down, just natural, right? I mean, you run 1,000 million% in just 4 days. I'm just kidding. Obviously, it wasn't that much, right? But, 4 days worth of trading from the bottom to the top, that's 60%. You're eventually going to get a big candle to the downside, right? But the price action structure is very clear in my opinion. The bulls are just looking for a higher low, maybe for a bit more, but eventually too, guys, the higher time frames will have to consolidate as well. You will have to eventually find some form of a weekly higher low. So just for now, pay attention to the daily uptrends. If you lose a daily uptrend, then you should expect more weekly consolidation, and that could be the end of the momentum. But for now, no major levels have been lost, just some healthy consolidation in my opinion. And the rest of the stocks we've already covered in yesterday's video too. We're not going to be going over them. We covered Costco already. So that's pretty much going to be everything. Running out of time on this video. So hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would really appreciate it for the growth of the channel. If you can as well, please subscribe to the channel, guys. We'd love to have you back. We do these videos every Monday through Friday after the close, except for when I'm traveling like right now. This is going to be the last video for the week, guys. Just pay attention to the non-farm payrolls tomorrow. Pay attention to the levels that I gave you in terms of more daily consolidation in the events the markets continue to drop tomorrow. You guys should be well prepared for any swing trade areas, any levels that you want to write some short puts on. You guys should have a watch list of companies to do that on, expecting some of this consolidation maybe to persist after non-farm payrolls. So keep that in mind. I'll see you guys on the top 5 options videos on Sunday. And lastly, as always, if you guys have any questions, feel free to leave them down below in the comment section. I always love answering your guys' questions too. And last but not least, guys, I present it every day on the channel, but we'll keep it short. In the event you wanted to join a trading and investing group with over almost 150 plus other members such as yourself, in which we trade every day and build long-term portfolios for the future. If you like my style of analysis, my style of trading, right, and everything in between, you might considering joining me and other members in our trading group. The link and all the information is down below in the video description. You get all my trades live in real time, access to our private morning live streams, the private member videos, and all of our chat rooms where you can ask me all of your questions on your stocks, your options, and everything in between all throughout the day, and I'm very fast to respond. So that's it for me, guys. Have a very good Friday session. I'll see you guys on Sunday. Take care and peace.